Maybe to start off with, one thing I think that's really fun is just to kind of walk us through one example of how you are automating, one thing that you found to be really useful that you'd like to share. And also when you do, maybe just give a nice introduction to everybody. And Cristene, you want to kick it off?
Sure. I'm Cristene Gonzalez-Wertz. I am a researcher by trade. I work on things like sustainability, human technology integration, and business storytelling. So I have a wonderful, fun remit. One of the things that I think is interesting and we found in our research is, to Ed's point, 96% of people who take virtual agent technology into their contact centers are actually seeing benefit. So there's a reason that number is so high, Ed. Simply put, when you start to look at those kinds of things, the business case for doing so pays off not only rapidly, but it pays off extensively, and it pays off extensively because it allows you to learn enough to go to other parts of your organization and to be able to see that. Because if in fact you find you have a problem in some area and there's a quality problem, you're able to give that feedback back. And the faster that feedback gets to where it needs to, the bigger the benefit to your organization in your ability to respond.
Thank you, Cristene. So my name is Hani Abbasi. I lead technology transformation and integration for TransUnion. I spent most of my career in technology consulting, investment banking, and transformation. At present, most of what we do, all the transformation elements here at TransUnion are technology-driven. Like, we are a technology-driven company, so we're moving to the cloud, we're doing automation and all of that stuff, right? One of my primary responsibilities is to look after the investment prioritization of these transformations. So what is the return on investment, and so on, as well as really look at if there is a cost efficiency component to it. To add your point around that digital transformation is targeted at workforce efficiencies, but also other efficiencies that are non-people related. So how do you quantify that? How do you translate that into tangible wins for the company? So I'm looking forward to the conversations today. Thank you for having me here.
Of course. Johan?
Thanks, Brody. So I'm Johan Henning from Brookfield. And at Brookfield, our biggest strength and our greatest challenge is just the size and scope of it. So we have $750 billion of assets under management, where we've bought various companies and assets. And in terms of the investment team, it's 1,000 people. But if you count all the people in the operating companies, it's 180,000 people. And we have to coordinate all of that data. Now, my specific role is in finance. I oversee the private funds in the infrastructure space that will buy portfolio companies. And we have similar functions in real estate and private equity. And our challenge is to assimilate all of this data in an efficient manner to do our reporting to our investors. So we've done a few projects over the last few years that dovetailed into each other. So the first one is we used a financial reporting consolidation system. So before, our data was with various service providers in a good quality and good systems. But the last step, the financial reporting, was a bit embarrassing, where it was still Excel and Word. We moved that onto a cloud-based system. Every service provider does it in, and it just had so many advantages. The review process is really good because everyone can leave their comments in there. There's a good audit trail. You don't waste time on formatting, because we want people to have a one Brookfield experience wherever they come in. But then if you have literally people wasting time setting column widths in one fund to be the same as column widths in the other fund, it's just not a good use of time. So you have one template, and then everyone uses that. It does the footing. And we started it with financial statements, and now we're using it for things like internal regional results presentations. Then the other challenge that we had is we have asset management teams that run or work with the portfolio companies, and then our FinOps team. And there's just so much data to move between them. So the normal things everyone struggles with: version control, integrity of data. So we use a data analytics tool now where there's one source of the truth. There's no version control issues, and it's become incredibly efficient And then lastly, we started using bots. So we have to issue certain notices to investors. Like if we call capital, I'll never send an email, you have to pay $50 million by next Tuesday. So we have a secure, and if anyone did that, their treasury team would need a talking to. But so we have notices that go in a portal that they download, and we have to check that because there can't be anything wrong with that. The same with their partners' capital statements. So we used to have to do a sample test, and it's very mind-numbing work for someone to do. But now that we use a bot, we can do a 100% scope test and go through it. So all of these things really add up where it reduces the man hours to do it, but more importantly, it really reduces the grind time. So people aren't wasting time on tables and graphs. They can focus on the analysis and the commentary, which is a much better use of their time. And to Ed's earlier point, it's about scaling your business. So we don't want to add X people every time we add Y assets. And this enables us to have a scalable platform. And then a few takeaways from everyone. Make sure that what you're doing is scalable. And also what we did, we never went big bang with any of the projects. We made sure we bit off what we could choose. So take a project, roll it out for one aspect, get that working, and you can see what other use cases you have.
That's awesome. Thank you. Yeah, I think that idea of saving us all from the administrative tasks, I think we can all agree that's kind of what burns you out. You know, it's all these dumb little compliance things, not having to do that. I mean, there's plenty I would like not to have to do. And
I have an example from my team as well, actually. Yeah, so one of the teams I manage does global infrastructure health dashboard. So we are in 35 markets. We have a lot of hardware and software, right? So this team is responsible for reporting out which servers and storage are on what level of utilization, if we need more of those. Where are we running out on vendor warranties, right? Where is the useful life coming to an end? And then corrective action needs to be taken, right? Earlier, that process took about 2 weeks, engaging 2 to 3 resources, liaising with different markets, validating information, and so on. We did an automation project to link about 7 or 8 data sources. We brought the time down from 2 weeks to less than an hour. And now we're in phase 2 of that project where we are posting these dashboards online. So it's becoming more of a self-help. And that's where some process efficiencies are coming in. So we no longer need to do calls all year round and follow up on next steps. Each team that utilizes those insights is responsible to drive their own next steps.
Awesome. Thank you. Yeah. And you know, I think we all can recognize that whether we're experiencing the start of a recession or just the fear of a recession, budgets are tighter, CIOs are a little more afraid to invest. And Cristene, I know you have some thoughts and you've done some research on this idea of when times are tough economically, what role does automation play? Is it harder? Is it cost saving? What's your take on how we should think about this?
Well, there's a couple of things. First things first. You're going to have to spend your precious intellectual capital, your personal brand, on things. So you're going to have to figure out what those are and make them, because you're not going to have multiple projects to choose from. You're likely to have to choose very well. And you're going to have smaller starting points. So Hani brought it up, but this issue of how you do rapid cycle testing and how you're understanding and testing for different metrics and what are the new metrics for what you're trying to do. So in Hani's case, the challenge is not how much uptime is on there. The challenge is, do you know how many labor hours you spent doing it before to understand how to calculate your savings? That's not something the process has necessarily accorded us for. So if you're simply making things faster, you are reaching, if you're simply speeding things up, you can reach mediocrity faster. Don't want to do that. The other side of it is how you are able to look at the principles of Agile. And Agile is something that we've talked about on DevOps for a very long time. But Agile is something, as it now moves into the business, means that you have smaller pieces you work on, and you're able to reevaluate yourself once you've gone through that process. So you're able to start you're able to start small, and then look at how you redirect as you go, instead of just building one big end-to-end monolith up front, because you're not going to get the money for it. So understand how you start small and get management buy-in for how you will be able to scale.
Awesome. Thank you so much. And yeah, and Hani, what are your thoughts about what forms of automation are kind of always going to be good in a time where budgets are tighter?
I would say start with a broad statement, right? I think any big transformation effort requires needs a return on investment, right? Ultimately, we do transformation for our customers, and in our case for TransUnion, we also do it to improve the lives of consumers, right? But ultimately, if you're talking about a budget of hundreds of millions of dollars or sometimes north of $1 billion for a digital transformation, it needs to have value creation for investors. If you can convince, if you can, to Cristine's point, track or measure the impact, and you can communicate that and report that to investors, I don't think there is huge constraints on any economic environment when it comes to carrying out those projects. Like at present, we are continuing at full force our digital transformation efforts, including our cloud transformation program. If you look at other adjacent industries where some companies are going through major change, the projects are not stopping because they have a good value argument, either through revenue upside or cost reductions.
Awesome. And Johan, I mean, as an asset manager, I know very acutely aware of the economic environment. So what do you think? Is it harder to get sign off on automation projects in this kind of environment?
I agree with you. CIOs will be a bit more reluctant to sign, but in this time where there might be some economic pressure, if you can add value, it's important. So I think the key here is they must be well-run projects and actually deliver tangible value. Companies where it's lavish and extravagant and not well managed and there's a big spend and it doesn't deliver the result, they're going to hurt.
Yeah.
And like we make sure that we won't be one of them. But it's going to happen.
None of us will be one of them.
Yeah.
And Cristene, what do you think about, you mentioned this idea of how crucial it is to get that internal buy-in. How do you do that? How do you make sure from the get-go that you have that?
I think that there are a number of ways to start. And the first is, everybody wants to jump to the end state. And I think that understanding you've got probably 3 hops to get there. And 3 hops is a good way of thinking about it because, I think it was Drucker who said that a pilot is what teaches us everything we didn't know about the project going in, which is absolutely true. So your first set is to be able to understand and really articulate your problem well, then to be able to look at how you're going to bring people along and how you're going to create a benefits case that makes a whole lot more sense. Because that benefits case is going to be built on different things. Okay? So now that you're starting to look at making that investment, how can you break it up into pieces and paint benefits that are more than just financial? Very frequently, as the CEO of Patagonia taught us last week taught us that the planet is not just a stakeholder. The planet can be actually the stakeholder. So how do we paint the sustainability benefits? How do we paint the benefits for the people? And how do we paint, as Ed said, if we've got that much time, what are you going to do with it? How do we paint the benefits to our customers and not losing track of any of that as part of the process?
Awesome.
Yeah, and I would like to add with that, it's really important to get management buy-in in the beginning and for everything you're considering with the project. And making them aware we're not going to get to the end state immediately, but showing them what the results will be in the first step. And also in terms of staffing, like what I found to be a great factor in success is you must have someone who's close to the business involved in the project. If you bring on the best team of third-party experts, they'll deliver something that works, but it's not what the business actually needed. So what I found works best is you actually have to identify the people and separate from their business, take away their day-to-day tasks, let them focus on the project with the consultant team, and backfill them for as long as it takes, whether that's temporary or even permanent. So I think it's helpful to get management to buy in the beginning. This is the way we're going to approach it. This will be most efficient. And then you have their support to make their staffing changes.
I would just add that the great points that Cristene and Johan made. Once that's done, though, it's very important to get adoption and engagement from the broader workforce, right? Because without that, digital transformation can be a total failure, right? And how do you, in my experience, the best ways around that has been to start with the benefits case, what Cristene mentioned, right? Publish playbooks as much as possible of like how things would be done, in light of any tools that you're using, right? Then upskilling programs. Now, depending on how technical your transformation is, say you're going to the cloud, then you may need certifications. And we did about 2,000 cloud certifications between 2020 and 2021 in TransUnion in our technology team, right? That's required to upskill folks, right? And then last but not the least, process engineering, right? If your processes are not tight enough to make your workforce sync with the technology to drive accountability, you have not really achieved the most optimal result.
You seem like you want to add something?
Yeah, the one piece that I think is also true there is how do we not just build for that end state, but there's generally a different set of resources. And this is kind of weird in the sense of you do that initial build out, and that's the discovery phase. But as you go into the development phase where you want to scale it, you generally need to rely on a different group of resources. So as part of our research, we looked at these number of states of the way you do this. The discovery resources, the people who build out and create that scale up front, are not sometimes the people who are the next phase, the actual growers of the technology. Builders and growers can be different people. So as you start to consider that rollout and that culture piece, make sure you're choosing well, because the developers like very much to get into, as opposed to necessarily the thought of expanding and bringing on adoption.
Awesome. Yeah, thank you. And we've talked a lot about this idea of internal buy-in, making sure employees, execs are all on board. We have a great question from the audience, this idea that we can measure if something saves us costs, quickens processes. How do we measure whether or not it's actually good for the customers? Maybe Johan, you want to kick this one off?
Sure. So in our business, our view is we have two types of customers. We have the people who invest in our funds, whose money we manage, and then we have the customers of the portfolio companies that we run. And in terms of the investors who invest into us, we have an investor relations team, and we don't have millions of customers there. It's like we can measure in the thousands, so it's easier to monitor, and we get very direct feedback from them if they're not happy. So a few years ago, we rolled out this investor portal across all our funds, all our business units, where I mentioned we put the capital core notice distributions, and it's been really seamless, and we've seen like very tangible happiness results from them. Because apart from just accessing the safe data, it has a lot of live reporting that's specific for their holdings, which is really value add. And when they see that, they give us the feedback. And then each of our portfolio companies will have their own way of measuring the customer satisfaction. And sometimes it's through hard metrics like what is the retention? When the lease is over, do they renew it? And then often they'll have to do surveys to see, is this working for you and where can we improve?
Awesome. Hani, what do you
I would
think?
just add to that. I think you can measure. So for us, we're primarily a B2B company, right? I think it's possible to measure the customer experience return through the customer life cycle. So all the way from how well they are able to understand your products to how they're able to connect to customer service in general, and then any other upgrades and so on. So for example, if you do a digital transformation and you can bring down the time to connect your customer from a few months to a few days, right? Just that adoption on its own is a very well-known metric that we track, right? Second is like you can have more generic overarching KPIs like the NPS score, right? We track that on a very regular basis. We get direct feedback. We do surveys, as Johan was mentioning, for like more mid-market customers. And then there are other KPIs you can track, which is like how well or how successfully are customers upgrading on your products? How much more successfully are they exploring new products, which they hadn't done so. So depending on where you are with the customer's life cycle, you can track certain matrices to see your success. Yeah.
Awesome. And Cristene, I know that probably as all of us are customers in this room, supply chain issues have, really hurt a lot of us. And you've done some research on how, automation can improve the supply chain for customers, and I'm wondering if you could share.
Yeah, I think that first of all, supply chain is affecting everyone. There is not an industry out there that has not been troubled by supply chain and supply chain disruption. There is a statistic that says virtually 45% of the retailers in business who, without rapid and distinct remediation to their supply chains and the challenges they face, might go out of business. They are at risk for bankruptcy. It is, but this is not just limited to these kinds of pieces. We do this exercise. They're called Wardley maps. And what they do is they begin to map strategic forces, and we're in the process of doing this for, we have, I think, 60 maps that are in place that map by industry all of the strategic forces that come in and cause shifts around that, and the supply chain has risen to the top as the biggest issue. When we start to look at the supply chain as a means to do this, most of our supply chains were designed to look one up, one down, okay? The challenge is we have no ability to remove that systemic risk that exists from the beginning of the supply chain, from concept to creation, and then through reclamation on the back half. So you've got to have that whole piece in mind now, and there are advantages to being able to build some of these capabilities. You're going to end up doing it with apps. You're layering over apps in general. But even things like the software bill of materials that came up. Just as an example, Tesla doesn't update all of their vehicles at the same time. So every Tesla has its own bill of materials. How you're going to track that, Ed brought up complexity. That is it. That you've got to understand the complexity at unit levels. You can only do that through automation. So as you're starting to consider the ways in which you will redesign your business, you will determine tasks that simply cannot be done by humans. You will determine tasks that you would dramatically prefer will be done by humans. But how you, to the gentleman's point, to Hani's and Johan's point, how you orchestrate the data and create longer lines of sight and notifications and means of letting you know how to handle that will be the only ways you're going to get through that, those kinds of upgrades.
Awesome. And so this is another one from the audience, and I'm going to open it to whichever one of you feels, compelled. So are we at a point yet where some of these traditional professional service jobs can be fully automated? Things like car salespeople, accountants, paralegals. Are we here? And if not, how far are we?
I think it depends on what part of that workforce we're talking about. So if you take, for example, let's say car salespeople, right? If you're talking about more manual elements of that role, which to Ed's point earlier, right? Like you can automate a lot of that, right? You can create workforce efficiencies, but then the question becomes if automation becomes a commodity and every car dealership can have access to it, what is your differentiated experience, right? And in order to drive that differentiation, you will need some level of personalized touch. You'll need some level of customization. So there are layers of that labor force where you can talk about automation, and then the others which will be your differentiator, right? And then the second question becomes, what do you do with that automation or that efficiency, right? It doesn't always go down to the P&L as a saving. You can grow. You can repurpose that workforce to future growth initiatives. You can repurpose them to new business lines that you want to drive. Just my 2 cents on this topic. Yeah.
Really interesting.
Yeah.
Do you have a sense of how far you think we are from a full automated workforce? Not full automated, but some of these roles can be fully automated.
Yeah, I think we're on the cusp, and what's going to happen is some of their tasks are definitely going to be automated, but I don't think it will yet replace like the full paralegal.
Yeah.
And also the tools they have, one paralegal might be able to handle the volume that 3 used to do.
Well, look at during the pandemic real estate,
Yeah.
closings, et cetera. So much of that, which was absolutely a face-to-face business, had to be done in person. You had to meet with the realtor 16 times. I bought a house last year.
Oh, man.
And so all of the pieces that needed to be done were moved online, not just rapidly, but it felt overnight. including all of the signatures and the management, the doc management. Now, how you're able to do that, you still need that realtor to kind of walk you through houses or have some guidance that actually knows you. Sure, you can go through and say, I like that kitchen. I would never exist in that kitchen, and that isn't a kitchen, it's a kitchenette. So being able to do that, and AI can learn those things and sort of bring you back pieces, but being able to assess the whole house and understand what a human is going to do in that instance, you're not going to do that. That's a fundamentally human task.
Awesome. Well, I think we're at about time, but thank you all so much. This was awesome. Can we get a round of applause for our panel here?